Hey everybody, welcome to Mortgage Today for Tuesday, May 21st, 2024, and oh, what a day it was. UMBS was pushing into the green this morning, up 14 basis points in the first hour of trading. Wall Street was poised to open steady on Tuesday as traders retreated to the sidelines ahead of results from Nvidia Corp and speeches from a slew of Federal Reserve policymakers. The main focus of markets is Wednesday's results from artificial intelligence bellwether Nvidia, which has powered a large chunk of the S&P 500's recent earnings. Nvidia shares rose 2.5% in New York on Monday, sending the NASDAQ 100 index to a record high. Cleveland Fed President Loretta Mester has lowered her forecast of rate cuts this year. I was on record before saying that the median forecast, which was 3, the developments I've seen, I was on the record before saying I was at the median forecast, which was 3. The developments I've seen in the economy right now, I would not think that's still appropriate, she said in an interview with Bloomberg TV. She added she would be open to a rate hike if needed. Home prices rose 0.5% month over month and 7.3% year over year in April, according to Redfin. An interesting data point on the state of the economy is inventory is building at Stellantis, and cars that would have sold easily a year ago now sit unsold and unshipped. Consumers are tapping out with 1/3 of car payments above $1,000 a month, which are sticking with the old cars at the moment. Inventory build, especially in autos, is sort of an economic canary in the coal mine. If inflation doesn't start falling, we could see a return to stagflation. Federal Reserve Governor Christopher Wallen indicated that if economic data shows continued softening over the next 3 to 5 months, it might prompt a central bank to consider lowering borrower costs by the end of 2024. Speaking at CNBC and the Peterson Institute for International Economics, Waller emphasized that sufficient positive data, particularly in inflation, which needs to show several more months of improvement, could lead to interest rate cuts. He welcomed recent consumer price figures showing progress towards the Fed's 2% inflation target, but cautioned that the labor market remains robust, suggesting a need to maintain cautious approach to monetary policy. Waller also noted that current economic conditions do not suggest imminent economic downturns, reinforcing the potential to maintain current rate levels longer than previously anticipated. Day 4 of the 11-day weekend is in the books, and the bond markets did exactly what you'd expect if you were expecting the least intriguing outcome. Specifically, yields had drifted as high as 4.45 plus in the overnight session. That's a bit too close to the 4.5 range boundary for 11-day weekends, but traders figured it out and started pushing back towards more central levels in spite of several Fed comments that might be considered hawkish. Speaking of the Fed, tomorrow brings the minutes from the most recent meeting from 3 weeks ago. While Fed minutes have had huge impacts in the past, I'm not expecting any fireworks from this installment. So UMBS closed the day up 18 basis points at 100.53. So at 100.53, it breaks us right above that Fibonacci line at 100.429 and almost dead on that 100-day moving average, which is really our top statistical line there at the R2 at 100.539. So hopefully get some bad news that pushes us back up and we can make a run towards that other Fibonacci line. If you haven't heard or you don't think commercial real estate is taking it on the chin, how about this one? Burnett Plaza, which is the tallest building in Fort Worth, Texas, has been purchased via foreclosure option for just $12.3 million. Just 3 years ago, after it was sold for more than $137.5 million.